All right, everybody. In this video, we're going to look at problem AP10B, Workbook Exercise AP10B for Chapter 5. And in this problem, we've got some adjustments that need to be recorded, and we're going to be putting those into the workbook spreadsheet here, and then we're going to record we're going to create the journal entries for those adjustments that we're putting into the spreadsheet as well. Okay, so let's get started here. To begin with, let's look at our transactions that we need to record. We've got a depreciation, prepaid insurance is being used up for this month. Interest is being accrued, and unearned revenue is being earned, is recorded as earned as well. So we don't have to do any calculations to figuring this stuff out. It's already just the numbers are told to us. So that makes it a little easier. Hopefully, be sure you know how to do all these calculations. We've had lots of practice otherwise doing that. So let's go through and put in our let's start with depreciation expense. And we've got $390 of the expense. And then remember, we want to put the credit to accumulated depreciation. Prepaid insurance of $250 has been used up, so we want to reduce $1,500 by $250, and that's insurance expense. Interest expense of $150 is being recorded, and that's interest payable as a liability. And then finally, unearned revenue being earned at $570. So let's go to our unearned revenue account, reduce that by the $570, and let's book the other side of that. So we have our credit, we have actual revenue just being earned, $570, and that's all the transactions there. So $570, $390, $250, and $150. If you add all those up, you get $1,360 total, and then $250, $390, $150. Same thing there. We get the same $1,360, and then we just need to go through, carry over all of our non-adjusted accounts, and then prepaid insurance, it's a debit, we're reducing it with the credit, and so we end up with $1,250. No adjustments to the equipment account directly, but then the accumulated depreciation account has increased by $1,260. It's a credit, we're crediting that to increase it. We've got accounts payable. We've now got interest payable that we didn't have before. We had a liability, credit balance for unearned revenue $6,500. We reduced that by $570, and so the final balance there is $5,930. That's payable $15,500, $49,000. Just carrying all these over. No adjustments, right, that were made there. We added $570 of revenue. So that increases the $3,400 to $3,970. And then we just carry it over to advertising expense. And then we have all these new expenses that we've recorded through our adjustments. And finally, just carrying over the rent expense there. And once you get all of these added in and you add up the totals on all these, you should get a total down at the bottom of $85,710, and that's your adjusted trial balance there. Okay, and then let's do the journal entries here real quick. So really, very similar to what we were just doing above there. We're just putting these in journal entry format. So we're working in September in this problem. Okay, and then as we just booked, so depreciation expense was the first adjustment. We're doing accumulated depreciation for our credit. And we'll just say depreciated equipment. And that total that they told us was $390. So there's that adjustment recorded in a journal entry kind of format. We already put it, into our spreadsheet above, but now we're actually booking the journal entries. So now we've got insurance expense of $250. We've got prepaid insurance being reduced Probably 250. And we're going to say we expensed 1 month of prepaid, or we'll just say 1 month of insurance. Okay. All right, the next problem we're looking at our accrued interest and our interest expense. So we'll say interest expense. The total we recorded for that was 150. And then interest payable for the credit. Oop. We want to indent our credits. So what we're doing, increase in our liability there, accrued interest on bank loan. And our final entry here is to recognize some revenue that was previously unearned of $570. So 570. And just record our little explanation here, earned revenue. And that's all the journal entries. And so, I mean, you kind of can see there, hopefully this is already sort of making sense, but you see you have the debits and credits that we're listing for these adjusting entries. You know, this is just listing them all out. And then this is them in journal entry format, basically. It's a the spreadsheet, this is kind of more of a reference tool, but the journal entries are more so where you have to directly go to take it from here, then to the ledgers, which will update the accounts to get us to a adjusted trial balance to prepare our financial statements, etc. with. So anyway, hopefully that is helpful, and we'll see you in the next video. Thanks.